All right, I think we'll go ahead and get started. Thank you, everybody, for joining us today for the presentation on how Brookfield Properties optimize reconciliation through automation. Let me share my screen. Eric, are you seeing it?
Yep.
Perfect. Great. All right. Over to you.
Okay. All right. Thanks, folks, for joining. My name is Eric Deedrick. I am a senior director over the financial applications team at the retail segment of Brookfield Properties. I've been here a little over 22 years. My bachelor's degree is actually in accounting, and I ended up migrating to like a functional technical system role over the many years here. And my group is primarily responsible for maintaining JD Edwards, OneStream, and Reports Now.
My name is Heather Brown. I'm a Senior Director, EPM Controllership at eCapital Advisors. I've been in the reconciliation software industry for a little over 20 years now. I was a founding employee at Blackline, where I invented their first generation account reconciliation product before leaving to found a small software company that Trintech acquired that became the basis for the Cadency platform. And then I spent nearly 7 years at Oracle in product management. I built out the ARM solution, ARCS solution, took over financial FCM, financial close management, and wrote all the functional specs for the transaction matching product as well. I took 3 years off following the Oracle experience and then joined OneStream. And it was there that I became exposed to the delivery role and found out that this is a whole lot of fun. So I made the jump about a year ago over to eCapital, where I am now.
All right, so a little bit about Brookfield Properties Retail. We have malls across 4 countries, but primarily in the U.S. We have about 150 malls at this point. That covers about 130 million square feet.
eCapital Advisors, we are a platinum OneStream partner headquartered out of Minneapolis, Minnesota, but we have staff located across the United States, and I'm sitting down here in sunny Florida today. We have practice areas that focus on advisory and transformation, enterprise performance management, and data and analytics. When I decided to leave OneStream to make the jump over to services, I chose eCapital because they have a commitment to maintenance of centers of excellence. And you know, I'm pretty honest about this. I'm getting up there in my years. I didn't want to be a generalist. I really appreciate being able to use this intense, narrow focus that I have on account reconciliations to help clients get the most out of their technology investment.
All right, so let me tell you guys a little bit about our OneStream journey so far. We've done 2 different phases so far. The reason we went to OneStream is because our HFM support, extended support, was ending at the end of 2021. So we decided, after going through vendor selection, software selection, to implement OneStream through another implementation partner, not eCapital. In this case, it was another diamond partner, I believe. So phase 1 started in September of 2020, right in the middle of COVID. And it was about, I'd say, a 14 to 15 month timeline for phase 1. So I'd like to talk about some of the benefits we got out of each one of these phases. So we implemented consolidations and reporting, obviously, to replace what we had in HFM. And we gained 50% time savings on metadata changes, because in HFM, we had to do metadata changes after hours. And in OneStream, you can do them on the fly in the middle of the day and consolidate and see the changes immediately. We also implemented planning, budgeting, and forecasting. So each one of our centers, our properties, has a general manager. And previously, they were putting together their budgets and forecasts in Excel and sending them to our finance team. So our finance team would spent hours and hours and hours compiling all the different Excel files from all the different properties into one massive HFM load file. And then we would load it. So there was a pretty good delay. I'd say at least 8 to 12 hours delay from when the GMs submitted their forecast to when it actually got in the system and they could see reports. We had implemented a debt model. So we use Chatham for our debt model currently. And we decided to bring that data into OneStream for better reporting. So we set up a data integration. It's basically just a flat file integration that finance loads into OneStream at the end of the day. We did a liquidity model as well. They previously were doing this in Excel manually, like a bunch of different what if scenarios. Like, what if we dispose of them all in 2024? How does that impact our cash flow going forward? So in OneStream, you could set up different scenarios and load data from another scenario into the new what if scenario to be able to have all the cash forecasting and reporting in one place. Account recs. This is what we're going to talk about today. So we have about 45 property accountants that do account recs, and they previously did them manually in Excel. And so there was no system of record, no real approval process that worked well. So we implemented account recs in November of 2021, but we had some challenges, and that's why we brought in eCapital to revamp how we did the account recs going forward. And we'll get into that more in a few slides. Our ERP is JD Edwards. We set up a SQL stored procedure so that we could bring in the GL data from JD Edwards with just one click of a button. It takes 15 minutes to bring in all the data and do the consolidations. Whereas before in HFM, it took an hour. So we gained a tremendous amount of time there, to the point where we're able to load data at the top of every hour during business hours currently. We set up a Power BI integration. We use Power BI for various reporting. And previously, Power BI pulled data from HFM. So we basically had to kind of do a lift and shift for Power BI to be able to pull it from OneStream going forward. Then we embarked on phase 2 in June of last year. It was about a 5-month implementation. It's a much smaller scope. We did a cash flow automation where we had a cash flow in JD Edwards, and it was extremely difficult to maintain, and we had to go through IT to make any updates to it. So it was really out of date. So we set up a dynamic solution in OneStream to just tag accounts basically to roll up on certain line items of the cash flow statement. So it's very dynamic. We did an Argus integration as part of phase 2, where we load 10 years of data into OneStream through a flat file process. Previously, this was pretty difficult in HFM, and it was pretty slow. It's much faster using OneStream. This is probably the best thing we did during phase 2. We did a JD Edwards drill back, is what they call it. It basically, if you're on certain screens in OneStreams or certain reports, you can highlight an account now, and for a certain period, and there's a drill back button at the top of the screen. You click on that, and it opens up a second screen in OneStream that has all the GL detailed data from JD Edwards. It's another SQL stored procedure we set up to be able to do that. So you're not looking at two screens looking at OneStream, at an account in OneStream and the account detail in JD Edwards. So it eliminates a lot of back and forth. And then we just did a OneStream upgrade at the end of the project, or at the end of the phase. And as part of that, the main reason we did it is so we can take advantage of the enhanced account rec capabilities that that Heather implemented for us during this project. I believe we're on version 7.2 right now, by the way. Actually, no, I think we're on 7.3. Apologize. Yeah, so now I'm going to talk about some of the challenges from the account rec part of phase one. The main issue is just the performance issues we were having. You would open up an account rec. It would take like 10, 15 seconds just to open up the account rec itself for a property. And then to just go from account to line item to line item, account to account, it would take at least 15 seconds. Oh, actually, I misspoke. It took like 30 seconds to open up the account recs. So going from account to account, 15 seconds, it's just not acceptable. And so, like I said, we went live in November of 2021. It got so bad that the accountants decided to scrap it and go back to Excel like 5 months later. And they've been in Excel ever since until the go live of this project, which is upcoming, and I'll talk about later in the slides. So we should have spent more time with our original implementation partner to just go over the design itself. It ended up getting designed poorly at the end of the day. Basically, every time an accountant was selecting an account, it wasn't just looking at the combination of property account, it was looking at all 87,000 or so property account combinations in the background. And we didn't realize it was doing that until Heather came in and we embarked on this project. So that was a huge win at the end of the day, in addition to a bunch of other wins that Heather's going to go over in a minute. So, I mean, the bottom line is you have to spend the time to design the solution correctly at the end of the day.
So thanks, Eric, for the background. I really appreciate it. So I became introduced to Brookfield Properties at last year's Splash conference, not the one we just had, but the one the year before. Their former RCM administrator had approached me and described these issues that Eric was just talking about. And when we were having the conversation, I was actually really surprised to hear that these problems were happening because, you know, I've been working with RCM for several years now. I mean, I worked at OneStream and I know the product inside and out, and it's a really fantastic product. I mean, if I'm honest, it's my favorite product, and it's the only one that I didn't invent. So I suspected that there was something that wasn't quite right in the design. So when we got back from Splash, we scheduled some time so that we could take a look at the configuration and I could try to figure out the root cause of what was going on. Now, my personality type doesn't like surprises. So for that reason, I'm going to go ahead and spill the beans and tell everybody straight up what we found. And then we'll spend the rest of this presentation digging into the details because there's, you know, even though this case study is about Brookfield Properties, there's some really important nuggets here that I think are relevant to really every project out there. So there were two primary issues that we uncovered. The first one Eric's already alluded to. There was ineffective segregation of reconciliations across the 168 mall properties that Brookfield owns. So to say it another way, the root cause problem was that they were simply trying to access way too many reconciliations every time they opened either the inventory page or the account list page. And in fact, to be precise, there were almost 87,000 entity account combinations that the system was trying to load into memory. And so this is truly the singular reason why screens were taking so long to render. The second issue that we found was that users had been hoping for greater automation around the preparation of account reconciliations, and that their experience during the first phase of the project was that this wasn't the case. It wasn't saving them any time at all, and that was disappointing to them. So here, though, I want to be clear that this is, you know, often the approach taken by implementers, even myself, in phase one implementations is to implement just the basic features first so that we can get some quick wins on functionality and then add in the bells and whistles later as a, very quick second phase. And so for RCM, the priority is typically around getting tracking in place so that companies have control over the completion of reconciliations and can make sure that the internal control itself is functioning effectively. So automation typically comes, like I said, later. And in Brookfield's case, they just, never had a chance to get to later because they were struggling so much with the performance issues that we've already talked about. So let's go ahead and dig into that first issue in greater detail, this reconciliation segregation by mall property. So to understand this issue, you have to look at how Brookfield imports actuals. Eric talked about the fact that they have a single instance of JD Edwards, and their actuals are imported into 8 different import steps, with each step importing a range or subsets of balances for different companies. And as I mentioned before, there were 87,000 entity account combinations. However, one thing we realized through discussion with the team is that even though balances are stored that way, that's not how reconciliations are performed. Reconciliations are performed at the mall property level, and each mall property has a collection of entities that roll up into it. So this was the first design challenge that we hit. How do we take 87,000 entity account combinations and turn them into reconciliations that are at the mall property account level? So to find the solution there, you need to understand a technical part of RCM, and that's how reconciliations are discovered. Reconciliations get discovered based on imported actuals. And there's only 2 ways you can discover reconciliations. You can run the discover process on the base input profiles where actuals are imported, or you can create a separate review level workflow profile hierarchy and associate the actuals to that hierarchy using something called a name dependence feature. So this latter approach is the approach that was taken by the original implementer at Brookfield. They created 168 review level workflow profiles for each of the mall properties. That's what's showing here in the screen print that you're looking at. And they use the name dependence feature to link those 8 import steps to each of those 168 profiles. So here's the problem with this approach. Even though they created separate review level profiles for each of the different malls, each step, each mall shared the same name dependence. So the structure, workflow profile structure, wasn't performing any filtering function. Regardless of which of the malls you clicked on, you still saw all 87,000 reconciliations. And it's just way too many records to try to pull into the page. That's why it bombed out. So there was a second issue lurking here, and that is that, remember, they don't reconcile at the entity account level. So they don't want to see 87,000 different line items. Rather, we needed to find a way to group those together into mall property level recs. And I'm going to tell you straight out, the account groups feature in RCM is a great feature. There's definitely going to be times you need to use it, but you do not want to find yourself using it for 100% of the population of your account reconciliations. That's just bad design. Your administrators are going to hate it. It's going to take them a lot of time to maintain it. Every time a new account becomes active on your chart of accounts, you're going to have to hit every one of those mall property account groups to manually maintain it by adding those new accounts into those groups. And the second thing is, it just adds a tremendous amount of complexity and overhead to some of the background processes that RCM has to do, like calculating reconciliation balances and such. So there's definitely a better way to do this. So here's what we did. We replaced the review level workflow profiles with base input profiles, and we moved that entire structure into a new cube suffix. So why did we do that? Well, it's because Brookfield has a lot of workflow profiles. For RCM alone, as I mentioned, we have 168 just for the individual mall properties, plus some review level structures that we put in place just to facilitate organization and call it sub-filtering. So to keep their workflow section neat and tidy, we felt that it was best to segregate the account reconciliation structure from their actuals, and the cube suffix option gave us this capability. The next thing we did was create an alternate set of actuals for RCM, and we did that using a connector business rule that read the actual actuals from stage. So why did we do that? Well, it was so that we could pre-aggregate those balances at the mall property level. This is what is going to allow us to not have to use account groups in RCM, except if they find that they happen to do reconciliations across disparate accounts within a single mall property, then they would still need to add a group. But other than that, there should be 0 account groups. So to do this pre-aggregation, we needed to find a way to associate at the entity level the mall property that the entity belongs to. And what you're looking at here on this screen print is the method that we used. We used the text1 property on the entity dimension to accomplish this. The connector business rule just goes and does a lookup to that text property to figure out, you know, what mall we're supposed to assign that balance to, and that's what we assigned as the source entity dimension member. So after making the above 2 changes, the performance problems at Brookfield were completely eliminated. The screens load exceptionally quickly because when you access RCM from any of the mall property workflows, you only see the reconciliations that pertain to that particular mall property. If you access RCM from any of the review level workflow profiles, you're going to see the reconciliations that are associated with the mall properties that roll up to that review level profile. So the end users are happy because they can navigate through the system quickly and efficiently. It's like I said, it's just zippy at this point. Administrators are happy because the admin burden around the account group maintenance was completely eliminated. And so overall, I would just say a very positive outcome for that redesign activity. So I wanted to take a minute and just summarize the takeaways. You know, we've been talking a lot about these issues in the context of Brookfield, but there are some important takeaways that I think are relevant to everybody's project, and I wanted to share those. The first one is when you're working with high volumes of reconciliations, you know, and high volumes is relative. It's a good idea to segregate reconciliations into manageable chunks in order to maximize or optimize screen rendering times. So to accomplish this, where possible, just create review level workflow profiles like in a hierarchy, but make sure that for each of those review level profiles, you're only including a subset of the reconciliation's total population. When you have actuals that get imported through different base input workflows, you can do that just through selective assignment of the name dependence feature. However, if like Brookfield, your actuals are truly imported centrally or using a range of accounts breakdown, you're probably going to have to take a different approach and mirror what we did here at Brookfield. You might have to use an alternate set of actuals to break up the balances into manageable chunks in order to achieve that segregation. Interestingly enough, following this work, I did end up going back to another client of mine that was struggling a little bit with screen rendering times. And I tested the theory with that client as well. And you know, for that client, all we ended up doing was going back to their base input profiles where they import actuals, and we exposed the account reconciliation dashboard on those base input workflows, but just for the RCM scenario. And huge difference. You know, they were accustomed to always going to the main account recs workflow profile, and they noticed that when they accessed it, you know, with smaller chunks of recs, it was so much faster. So minor adjustment can make a big difference. And then the third point that I wanted to share is resist the urge to use account groups except when truly necessary. Like I said, it's a great feature. It does add a lot of overhead to the system, both in terms of administrative burden as well as time during the process function when balances get created. So I want to move on now to that second solution that Eric alluded to in his overview, which was delivering efficiency on reconciliation preparation. So for this topic is really important because OneStream Financial Close, which RCM is a part of, really does offer tremendous opportunity for time savings around preparation of reconciliations. And in my experience, these are some of the most underutilized features simply because, you know, like I said, they're often slated for phase 2, and sometimes phase 2 just never happens. So there are 3 main tools that we have at our disposal when we're looking to automate preparation. The first is transaction matching, then balance comparison with auto reconciliation, and then a newer one, spreadsheet automation. We used all of these at Brookfield, and I'll explain how next. So with transaction matching, this is a tool, a feature within OneStream Financial Close that offers the ability to match transactions within or across data sets. And your objective when using this tool is to find out the net list of transactions that are outstanding as of the end of the period, because it's those transactions that are used to explain the composition of an account balance when you're preparing an account reconciliation. So for your typical corporate, the most common use cases for this particular preparation method would be bank reconciliations, intercompany reconciliations where you're having to look at the payers and receivers, and then high volume accrual or suspense accounts where you're trying to net debits against credits in order to figure out net what's left in the account balance. So one of the first activities that the Brookfield team undertook was a project with me where they stratified their accounts. They went through their entire chart of account and assigned to each one of these accounts one of these 3 methods, transaction matching, balance comparison, or spreadsheet automation. So they found 74 different accounts where the format of the reconciliation required netting cumulative debits against credits in order to derive the net balance. So in the past, you know, users were using this same method. They were just doing it manually in Excel. And so for us, this created a very quick and easy use case. We just had to go grab the JD Edwards transactions, configure a quick match set. We actually use 3 different match sets because we've got different match rules for different types of accounts. And then in a very short period of time, we were able to stand up this feature and then use it to derive the net list of account transactions. And then we send those across to RCM at the end of the month to automatically create the account reconciliation. Now, balance comparison with auto reconciliation was the second tool that we used. For these accounts, the team they weren't interested in actually analyzing or matching transactions. Rather, they wanted to compare the balance from the GL, from JD Edwards, to the balance from some other system and to see if it matched. And they found 9 different accounts that could use this preparation method, including open accounts payable, open accounts receivable, a range of different security deposit accounts, and then another one, Chatham, which I think you said was your lease system, if I recall correctly. I forget, but I know it's called Chatham. So under the manual or existing reconciliation process, again, users were already doing this work. They were individually, each reconciler was having to go look up the balance and then type it into the spreadsheet and then manually compare it to the GL to see if it matched. So this was a fun project to work on because it's where OneStream's flexibility really starts to shine. We were able to find existing reports that the team was already using that we could repurpose for this, for RCM. And it didn't matter that the reports had headers on them and subtotals. When we built the data source definition to pull the data in from these reports, we could ignore the lines that we didn't need and just grab the balance rows. And then we aggregated those balances, mapped them over to the appropriate reconciliation, and then we assigned an auto rec rule that checked to see if indeed the GL balance did match what we imported for the subledger. And if it did, we auto certified the reconciliation because it didn't require anyone to have to do anything else manually. So again, this was a really quick and easy win for us. With just a little configuration work, we were able to get that stood up. The third tool, Spreadsheet Automation, is the one that I'm most excited about. In fact, I'm doing a lot of work in this area with a lot of different clients around the account reconciliation and transaction matching use cases. And the reason I'm excited about it is because this really emphasizes the power and flexibility of the OneStream platform. So before I explain what we implemented, I want to talk a little bit about the background and what Brookfield was doing here. So as Eric explained, they're a real estate company, and they have a lot of accounts that get reconciled using what I would call an account analysis style of reconciliation, where the balance is justified by listing out the list of items that should be in the balance as of the end of the month, but also presenting more of a roll forward presentation to show how that item flows into and out of the balance over the 12-month calendar year. So reconcilers have spreadsheets that they use for these analyses that they're very comfortable with. You can see a screen print of the spreadsheet here. Notice at the bottom, you see all those different tabs. This is a multi-account workbook. So each tab is for a separate account. So, you know, if I'm honest, this is just like the perfect tool for this use case. Reconcilers love it. It's doing the job. It's easy for them to create their analyses, and, you know, taking this away from them is just not anything that we wanted to do. But what we also acknowledge is that the spreadsheet isn't particularly good at serving as the audit documentation that you need for reconciliations unless you find a way to capture the data that's on that spreadsheet and save it off in the reconciliation tool where it's protected and locked down and can't be edited after the rec's been certified. So we thought deeply about this requirement and we actually talked about a few different options. Initially, we were considering using bot automation technology. Eric's got some skills where he can, you know, program bots. I don't remember which software that you guys use, but it's something that he knew how to do. And so we thought about, well, maybe we'll just go grab the spreadsheets and attach them to the reconciliation and, you know, find a way to automate the certification. And what we decided in the end was that the spreadsheet itself isn't really what we needed. We just need the data off the spreadsheet. So that's the approach that we ended up taking. Here's what we did. We ended up using the table views feature. I don't know how many of you have heard that before, but the feature's been out there for a long time, but it was exposed in the Excel add-in, you know, when you can use Excel independently of OneStream in version 6.8, if my memory serves. And what it allows you to do is when you're working in your Excel spreadsheet, you can both pull data into the spreadsheet, but push data back to ancillary tables. So you've always been able to use Excel to read and write from cube views, but the 6.8 version gave you the ability to push the data back into ancillary tables being extra tables that you can add into the OneStream environment. So we didn't want to push the data directly into the RCM tables. That would be a terrible idea to do that. Never, never, never do that. And the reason why, it's way too risky. RCM has got really critical controls in its code that prevents insertion of data into a reconciliation, except when you should be allowed to add that data. For example, it looks at the status of the reconciliation. It checks segregation of duties to make sure that, you know, the preparer and the approver aren't stepping on each other, that sort of thing. So what we did instead is we pushed the data into an ancillary table that we created, and then we developed a connector business rule bound to that table, and we pulled that data into stage as balance check balances. So we're using a native RCM feature for this. So those balance check balances, which are really the items in the rec, then get pulled into the reconciliation through the standard RCM process. Then we assigned an auto reconciliation rule so that as long as those items fully explain the balance, the preparers don't have to necessarily complete it. It can go straight into the approver's queue. And then the last thing that I have yet outstanding is I need to develop a quick report for them off of that ancillary table that shows the item list and that 12-month rolling view. And I'm going to put a button on the rec so that when they're looking at the rec, they can bring up that, a separate like modal report that shows exactly what the spreadsheet has in it. So using this approach, preparers, we just finished we did like a limited scope go live with a short list of mall properties to test the process. And as of today, we've got all the data in there for all three methods that we've talked about, and the feedback has been really, really good. So I want to send it back to Eric now to talk a little bit about the value proposition that Brookfield expects to realize. And then after this, we can open the floor for questions.
Yeah, so at the end of the day, I guess, what is the ROI that this project gave us? As you can see here, I'll skip down to the bottom comment first. It saves an hour and a half per property for a total of 200 hours per month across all of property accounting. So it is a huge ROI for the amount of money we spent on this project. So basically at the end of the day, it's almost 50% time savings across 45 property accountants. So the ROI has been tremendous. And like Heather mentioned, I think we did a set of 12 properties for phase one to kind of run parallel for the April close. We're going to do the rest of the properties, phase two, to run parallel with the May close at the end of the day. So we should be fully live by the end of June with this project.
All right, so I think that's all we had. I'm going to stop sharing here and see if we have any questions. I think folks can unmute themselves. Is that right, Marissa?
No, but if they want to type in the Q&A and then we can pull those up.
Okay, perfect. So I guess there's a chat panel. If anyone has any questions, we can respond to questions coming through chat. Looks like we're not seeing anything come through, so we can probably give folks a little bit of time back in their day.
One just came through.
Oh, okay. You're seeing questions? I'm not. Oh, there we go. Does this require a full-time admin, setup and data loads, user support? That's a really good question. So I think that it probably depends on the size of your organization. If we're talking about the account reconciliation requirements themselves, I would say definitely not. I mean, Eric, you've just gone through the procedures that your team has to go through to load the alternate actuals, pull in those subledger balances, integrate the spreadsheet data. Would you be able to talk to the amount of time that you think you're going to have to spend on month-end tasks for TXM and RCM?
Yeah. So right now we have 2 full-time admin folks for OneStream, and previously with our old account rec process with the grouping and all that stuff, and it would take 4 hours to run every day to do the inventory part and to populate the recs, which was crazy. Now that part, the daily part, takes 5 minutes, and we could schedule it through data management jobs to run at the beginning of every day at the top of the hour or whatever, 5 a.m. So it's going to save just a ton of time every day. And even that 4-hour process with the original setup, sometimes it would run and then it would fail. So we kick it off at 5, fails at 9, and then you're in a bad place. And then the monthly processes, I just kind of went through this with Heather over the last week. I can't really speak to how long that is going to take. I would say no more than 30 minutes. Would be my guess at this point.
I think that's a fair assessment. So just to recap, the daily process that he's talking about is to run the alternate set of actuals so that we're populating reconciliation balances on an updated basis daily. And best practices, as he noted, would be to throw that on a scheduler, task scheduler linked to a data management sequence, so you don't have to initiate it at all. It just happens behind the scenes. Definitely you want to keep an eye on your task activity to make sure everything's running correctly. And then at the end of the month, he's got some reports that he's got to import for the subledger balances. He needs to run a process to pull in the spreadsheet data from that ancillary table, and then he's got to run process to update the recs. We probably won't schedule those activities, at least not for a while, because it's point in time. It's dependent. We need to get the reports from somebody before we can actually import them. So at this point, not really suitable for scheduling.
Right.
Now, with your administrative team, you've got a lot of other OneStream admin responsibilities, though, unrelated to account recs, though. So that's why you've got a group of you that work on this stuff. I mean, you've got consolidations, planning, all the other stuff that you're responsible for.
Right.
I will say, this project for me was low level of effort because I just provided, I guess, what I'll call the brain trust, the how to and what you should do. The Brookfield team did all the work. So, they were the ones doing all of the build outs for the most part. So
I wouldn't say all the work, but
most of it. Yeah, most of it. Okay. All right, looks like we got more Q&A coming through. Is there any direct integration to NetSuite connectors? We do have a library of connector capabilities to products that we've worked with in the past. Starter kits, I think we call them accelerators. And I think every partner's got an arsenal of them that they, have access to. So definitely, rarely do we have to develop any of this stuff from scratch. I mean, I can knock out a connector business rule in about an hour, with coding, unless it's really complicated. I have another client that's got some pretty horrendous connector rules that deal with extremely complicated SQL and stuff. That takes longer. So, but for the easy ones, it's quick. Which was the first account recs version that Heather mentioned that we can start working on this change that will help us speed up this process. Okay, so what matters is really the platform version. So you need to be on platform version 6.8 or higher in order to be able to use the spreadsheet add-in that doesn't require you to be logged into OneStream. You can go into OneStream, open up a spreadsheet, and use the table views feature there in versions prior to 6.8, but to have it in Excel standalone outside of OneStream, you need to be on platform version 6.8. So any of the RCM versions that run on platform version 6.8 or higher would support this type of process. And then we have a question about what is the user license structure. If you're talking about the spreadsheet capabilities themselves, that's just included free of charge with the OneStream license structure. You have to be a licensed user to be able to use the spreadsheet add-in, but as long as you're a licensed user, you can use the spreadsheet add-in. It's just another feature that they give to you. And Debbie, if your question was more related to OneStream licensing capabilities in general, I actually don't know because I handle the services side, not the software side. You'd have, but we can help you get connected to your OneStream sales rep for that. Let's see, is there another one after that? Is there an auditor dashboard? There actually, it's not a dedicated auditor dashboard, but there's a dedicated auditor role that filters what the auditors are allowed to see. So you can create a security group in RCM that is designed for auditors to use. And what that does is it precludes the auditor from seeing any in-progress work. They can only see reconciliations that have been fully completed all the way through the end cycle. And that's how you can hide from the auditors the stuff that they shouldn't see. There's also some of my clients I know use the audit package process, and instead of granting auditors access into the tool at all, they will just generate an audit package for the subset of recs that the auditor has asked to see. And when you create that audit package, it creates a zip file that contains not just the reconciliation, but all the attachments that may have been added to the reconciliation as well. Okay, let's see. Is there a document repository option? So file attachments obviously are a huge part of reconciliation documentation. And OneStream does use an approach where file attachments are stored as, they're called blob objects, binary large objects in the database directly. So it doesn't require like an external file share or anything like that to use. You're welcome, Debbie. Give it a couple more minutes.
Back to that dashboard question, there is a standard dashboard that comes with account recs that shows the progress of the account recs for a particular month at the end of the day. It's not really for an auditor, it's more for accounting management.
That's a good point, Eric. Looks like maybe another one. Did I miss it? Approval workflow. Yeah, so there is definitely an approval workflow. So reconciliations cycle through what they call a state. It starts in progress when the reconciliation is first created in the month, and then it goes through a sequence of prepared once it's been submitted by the preparer, and then in various approval, like approved level 1, approved level 2, and then fully approved, depending on how many approval levels you have. At any stage in that process, when balances are being imported, if OneStream detects that the balance changed, it'll revert the reconciliation back to a balance change status, and it'll have to cycle back through that preparation and approval workflow. So it does provide very strict control to make sure that your final reconciliation reflects the final period balance. You don't want to get caught with an approved account rec that doesn't actually match your GL. And there's some other nice features too, like you've got the ability to configure what the normal balance would be for an account, whether it should be a debit or a credit. So it can highlight for you where there's violations in that signage. It's got risk rating capabilities. You can implement what we call dynamic risk rating features, where you're assigning a static level of risk, but then you're articulating the conditions that would warrant it to have an accelerated level of risk, like if it had a history of rejection capabilities, or if the balance is outside of a range that would be considered normal for that account. We can create rules for you that will cycle through these different conditions, and if they've been violated, we can elevate the dynamic risk level assigned to the account, and we can even accelerate the due date. We can add approval levels on the top of it. I mean, there's a lot of fun things you can do to optimize preparation and make sure that you're staying on top of the accounts that are probably keeping you up at night. I appreciate the questions. Those are all really good ones. Anyone else? If not, Marissa, sorry, it's been a long day already. What's the process for recording links and such?
Yep, so we will probably send out the recording link either this afternoon or tomorrow morning, so everyone can get a copy of it. So everyone attending today will get a recording.
Perfect. All right. Well, thanks, everybody. We really appreciate the time.